Hello, everyone. Dividend Enjoyer here. And today I kind of want to give a rant on when I think it's appropriate to buy stocks and when I think it's not. I want to say that if you're buying stocks or if you're thinking about buying stocks or any investment, I personally believe that you should pay off all of your debts first. And I've kind of talked about that in the past. But specifically looking at like fixed income type of things like treasury bonds or CDs, I think that those are better if you need a certain amount of money by a certain date and you need a positive return. But I think that with stocks, you really want to be buying them for the long term and looking out at least 5 years from when you bought them and kind of gauging their performance based on that. It also kind of does help, I think, too, to look at stocks from like a 2 to 3 year basis on their performance, because I don't think it's very productive to be gauging your stocks too early, but you have to have some methodology of like if your stock's performing well or not based on your own standards. But when you're buying stocks, you have to kind of know that you're in it for the long term, because there are going to be times like what's happening right now where you're going to have periods where the stocks are not going to perform very well. You might have a negative return in one year and then a positive return another year. So it's very important, if you are investing in stocks or any kind of security where a return is not guaranteed, that you are doing so knowing that it's best to sell out when you're up a percentage that you're comfortable either selling out of or just holding those stocks forever and collecting the dividends, or selling out as you need the money and you're up. So if you're someone who's looking to actually buy stocks or buy any kind of asset that does not have a guaranteed return on it, you should be looking at the long-term prospects of the security you're buying. And you should also take in your own personal risk tolerance and things of that nature. I think that it's also very, very smart when you're looking at stocks or any kind of security to really understand what you're buying. All too often, you see people buying into companies that they have no idea what they do or why they're buying the company, or they're looking to buy into it to just sell it at a higher price next week than what it's trading at now. And I think that that's the wrong way to be purchasing stocks and investing. I think that you want to buy something looking at it like a long-term business, and kind of saying, based on this market cap and how much money this company is generating, would I be comfortable buying the company for the entire market cap listed? And there are a few ways to kind of do that. I mean, there are different things that you can also value as an investor. Some people are fine with paying a premium on a business as long as that business has consistently performed positively, even in bad economic times. You can kind of see that with companies like Rollins or Waste Management. I'm of the opinion that as long as the company's consistently making more money and it's a very strong business that I understand, those are the types of companies that I want to own for the long term. I don't necessarily want to pay a premium for anything. I want to buy things cheaper than what they're trading at. And I think everyone's kind of in that same boat. But I think that you also have to have the mentality that if you're patient, you're going to make a lot of money as long as you invest into the right things. And even if you just invested into the S&P index, over time, those people have done very well just doing that with very limited financial acumen. So I think that it's very wise to, if you're investing in stocks, to put in money that you don't necessarily need right now. If you need the money or if you have other debts, I don't think that you should be investing in any stocks. But if you find something that over the long term you think is going to be a great buy and you're very happy with owning for the long term, let's say you want dividend income, that might be something that factors into your decision-making process. Let's say you want dividend income, but you want a high compound annual growth rate so the dividend will increase more over time. That might be something that you factor in. But the number one thing that you should be factoring in if you're going to buy stocks is the business itself and where you think the business itself is going to be in the next 10 years. And I think that's the most important question you should be answering for yourself is, looking at this business today, do I think that this business is going to grow a considerable amount in the future or just grow in the future in general? And if the answer is yes, and you think that the business is trading below what it should be compared to what you believe it's going to be doing in the next couple of years, then I think that's when you buy in. I also think that high quality is worth a premium. I'm someone who believes in not timing the market, but just having amazing investments that you can hold on to for a very long time. Because if a company's consistently making more money, it should be worth more in the future. And if it declines, like if the value declines because of what the market's saying and it doesn't make any sense in terms of what the company is generating in terms of revenue and your outlook for the business hasn't changed, then you should be buying more of that company, in my opinion. So I hope that this kind of helps, this little brief rant, just because I'm of the opinion that if you're buying into something, it should be based on the quality of the company that you're buying into entirely. That should be the main thing that you're focused on. But you also should not be buying into something just to hold for 1 or even 2 years. I think that you should be holding on to the companies that you're buying into for at least 3 to 5 years. Probably more, because you're going to get better returns over time because it's going to snowball into something bigger. But if you're looking for like a 1-year return on something and you want a set amount of money, that's where I think an FDIC insured CD or treasury bond or something like that will help you a lot more. I hope you guys enjoyed this rant. If you guys like the rant, please subscribe to my channel. Please check out my stock analysis videos as well. I think they're pretty helpful at valuing companies. And if you're interested in my portfolio, please check out my portfolio playlist where I go through every week all of my positions and kind of give a detailed account of each position individually and why I'm holding it and if I'm going to be adding more or just holding. So let me know what you guys think. I really appreciate everyone who's been a part of the channel, and I hope you have a great rest of your week. Bye.